It's been a shocking turnaround. After 2 years of extreme bidding wars, the housing market has started to cool off. Yet, as rising mortgage costs and home prices push many prospective buyers to the sidelines, the inevitable comparisons of the 2008 housing bubble and predictions of another housing market crash, they've started to swirl. Let's bring in Yahoo Finance's Dani Romero for more on why the housing market isn't facing a repeat of 2008. Why not?
So the housing market is definitely better off today than it was 15 years ago, and that's thanks to the lending regulations that we now have in place. So that means that fewer homeowners are at risk of defaulting if prices do fall. We did see, though, economists at Goldman Sachs say that trouble is ahead in the housing market. They're predicting that home sales will fall even further through the end of the year. Now, while that could, definitely trigger some bells and whistles, this market really is a different one than the last one. Borrowers are have a better footing. If just take a look at mortgage delinquencies, they're low. Nearly 3% of mortgages were past due in July. Foreclosures are also down 25% from June, according to Black Knight data. But with these interest rate hikes, mortgage rates have definitely been on a wild ride this past month, bouncing between 5.4% to 5.8%. So that has really caused mortgage demand to pull back. Applications for home loans, as you can see on your screen, fell 3.7% last week compared to the previous week. And this has also caused a pullback in refinancing activity as well, which is highly sensitive to these weekly rate moves. But due to the rise in mortgage rates, that means that home buying is more expensive. So affordability has dipped to its lowest level since 1989. And there's still low supply for homes. Many Americans are playing the waiting game right now when it comes to buying a new constructed home, as demand really accelerated during the pandemic. If we take a look at those numbers, home listings are lower than pre-pandemic levels. New listings, which includes the first ones that go onto the market, that declined 2.8% nationwide from the last year. So relief could be on the way. There are some forecasts that mortgage rates are going to decline next year, according to Fannie Mac forecasts. But again, it is important to note that borrowers have a strong financial footing this time around than last.
Good point on waiting now. And why not? That Goldman report you mentioned, they're looking for no price growth in homes next year. They said zero. So why not just sit back and wait?
I mean, are you buying a home?
I'm not. I'm waiting it out. I am waiting it out. And why not?
Yeah, we also saw new listings for home sales, for new listings of homes for sale. They fell 15% year over year. That, according to some data from Redfin, and that's for the 4 weeks ending in August 21st. So a lot of data to really encapsulate where the state of the market is at. Right now.
And I think that's also the big thing about the housing market. There's just so much data out there that you're like, which one is which one matters more than the other. But again, it goes back to that strong financial footing that these borrowers have. So we're not going to see that.
You're all invited to my barbecue when I buy my house. All of you.
Oh, wow.
All of you.
Traeger or Weber?
I'm going Traeger. I want to go to the smoke grill, and I like to control it with my phone.
All right, cool. I'll bring the chips.
Gotcha.